Hey traders, checking out on the stock market today. Mostly consolidation sideways day, but we'll check in and see where we stand. And I'll follow up with the correlation example we went over yesterday in the cannabis sector as things significantly shifted today. So the S&P 500 futures chart, we can see it's a daily inside bar, which just means a tightening range. We can see the bull flag is still on the table, and bulls defended that support. Yesterday, I highlighted for me the importance that hourly oversold conditions would mark a higher low, and we can see overnight and then this morning, just tightening ranges, holding support, and trying to break bull into the end of the day, but not really getting any follow through as the NASDAQ failed to break resistance. You can see the same chart here for the NASDAQ on the hourly, and the end of the day move failed the high of the day, whereas the S&P 500 broke the high of the day. It's a little bit of a difference, but long story short, it is double bottoms with the low of yesterday, daily inside bars, and daily bull flags on the table. And bulls love a day like today because the burden of proof is on the bears, as we know. Bulls have had short-term control for weeks, and if nothing changes, then bulls keep their control. So sideways is always welcomed for the direction that is in control. Something has to change if we're going to lose the daily EMA 12 and negate these bull flags and nice clear double bottoms on both the S&P 500 and the NASDAQ to be watching into tomorrow. SMH, daily higher low is set. Bulls showed up convincingly. And you can look at this two ways. You could say we had, do we have an hourly trend change or not? And you could look at this and say there's your low, your high. The low of today is your higher low. So you could say, yeah, that's an hourly trend change. And again, this is dependent on the individual as to whether or not that counts for you. Because of the amount of follow through over the high of yesterday, I'm okay with counting that. And our daily higher low is 235.40. NVDA is keeping the daily bull flag alive. Pullback was about 40%, which we looked at in the video yesterday. 40% retracement. Earnings are approaching next week. And same thing, we held the low of yesterday and then broke the high of the bounce from yesterday. So, key new benchmark level for the semiconductors are daily higher lows. Tesla, daily inside bar, close at the low of the day, right near it. And bulls ideally want to hold 900 to keep a bull flag on the table. And daily EMA 12 support is going to be right behind that. Difference here between Tesla and some names that we just looked at is we have not broken the high of the bull move from Tesla yesterday. We just have a tightening range. Low, high, higher low, lower high, and bulls trying to hold 905 for another higher low and continued tightening range. The financial sector is just sideways. Volatility is coming. Look at the volume drop off, notably, and it's very tight. So we are either going to see a bull break of 35.72. Pretty much we have 3 short-term resistances and 3 short-term supports, and whichever direction that it breaks, you have to ensure the follow-through to break all 3 levels. So if it's going to be a convincing bull break, the bulls need to take out 35.72, 79, and 97, at least 72, 79 right away on a break. And if it's a bear break, these levels are closer together, so bears want to take them all out. 43, 38, 43 and 38. And you can see it's just a tightening range here. Low, high, pretty much a double bottom by a penny, and just tightening up. So break is imminent here. So over the weekend, I was heading into this week looking for financial sector daily consolidation to scout a higher low, and the healthcare sector to get a bull break and take a turn as a strong lead sector. And we started Monday great for healthcare, but this was not the move that I was looking for on that bull break. And it was watching the bull break of this resistance line. Little resistance zone here. So nice strong close above it on Monday. Inside bar Tuesday, no big deal, but giving it back since then. So at this point, cautious of weekly consolidation in the healthcare sector, and I will not sit through weekly consolidation in any bullish position. I will ditch it. So low of today is key for me. 131.85 needs to hold if bulls are going to keep this daily chart strong. It is still in an uptrend, but if we pull back any more than this, we then have space for the daily lower high to be the result of the next bounce, shaping up the potential of a downtrend. So healthcare sector bulls need to show up tomorrow. The one benefit of the weakness in the healthcare sector, I have a swing position that is in the red, but the biotech sector has been convincingly weak comparative to SPY and QQQ. And so I've been day trading that bearish the last couple of days, and that's been a nice clear trade, including first thing this morning. And the healthcare sector weakness is a factor in that. IWM, daily inside bar, trying to be the bull flag, nice strong close. So again, no red flags whatsoever for the bulls at this point. Biotech sector, so again, 3-day pullback. And first thing this morning, we opened right above the low of yesterday. And so I just shorted right away. And I would have covered if we held the low of yesterday and saw a new high of the day. That would have been enough of bulls playing defense for me to bail at least on that initial attempt. But that first 5-minute candle was great for confidence and then just scaled out on the way down. And then there was a nice bounce. Double bottom at the low of the day into the hourly bounce. So again, there is great volatility in both directions still. But I stuck bearish today. So long lower wick on the daily. And what I'm watching for next is, do we set a daily lower high as the result of the next bounce, potentially shaping up a daily downtrend? And what I'm going to be watching closely is XBI divided by SPY to see if it remains relatively weaker in a downtrend here. TLRY. So in yesterday's video, I talked about recognizing relative strength and weakness, and I talked about playing the stronger name bullish in setups where that's the most likely scenario, and playing the weaker names bearish. Sweetie Pants wants to go outside. And also talked about how we have to stay on top of correlations because they shift significantly and quickly. And so today, there was a very notable shift between these two tickers, where TLRY, which was weaker the last 2 days, dropped only 3% to its low of the day and closed down less than 1%, whereas CGC dropped 9% from the close of yesterday and closed down 6%. Very big difference. Daily inside bar for CGC. So what were the clues? So right before the bell rang, TLRY higher open, CGC lower. Watching that relative strength weakness relationship the first 30 minutes for any changes. So it was a little bit of a clue. Watch for the change. And the reason was TLRY, again, after being weaker for 2 days, 3 days maybe, very clearly, it was opening up 1% over the close, and CGC was opening down 1%. So it was a little bit of a tell. This is different than the last few days. And that pre-market information isn't enough for me to say the correlation is going to change today. But again, it's enough to pay attention. And then after the first few minutes of trading, you could see that that was clearly what was going on. CGC, from the high of the day, the first 2-minute candle was down 2.85% from the high of the day to the low of the day. And TLRY was a bit similar, but it continued to magnify the difference here. Whereas, I guess it was by 10 a.m., down 7% from the high of the day for TLRY, and CGC, well, it was very similar. When did it change? I'm on the wrong, nope, I'm on the right day. Okay, I had the wrong levels. So it was a difference of, down 4%, 4.5% to down 7.5%. And again, just a very notable shift. So TLRY still watching the potential of a daily rising wedge. And had those trend lines here and here. This is how I had it drawn. Probably would tweak the line a little bit. If we get a green day tomorrow, I'll tweak that line. We will be watching for anything under 452 to be a daily lower high as a result of the next bounce. So aggressive swing trading bears are going to be scouting a top fish off of 452 as long as there's not massive bull volume. And CGC, if we break the inside bar bear, we're going to be watching for a daily higher low with tons of space for it to form. And we're going to be watching for first hourly oversold conditions after that breakout. The VIX is still weak. Daily EMA 12, grinding the price down. And we're looking down at the low of 1912. If we do not get over 2116, nothing is changing. The dollar bull's following through with the 12-hour bull flag. So the weekly higher low is very convincingly set. This chart matters a lot for me over the next couple of weeks. Do we see uptrend continuation, or do we top out and confirm the most notable shift that we've seen all year in the dollar? The burden is on the bears. The bulls are still very comfortable with this chart. A bull's perspective is, hey, we're just bouncing off the same support line we bounced off of 3 other times over the last 8 months. And it's strong. Metal's still weak, just steady drops, 4-hour downtrends, grinding down into weekly consolidation. Silver, same deal. Bears in full control. And the miners, big drop today, following through from the big drop yesterday, but also a very solid bounce as well. No, it looks like that was a fake out wick. What was going on there? Yeah. How do I know that wick is not real? Look at the volume. If you're seeing the same amount of volume with a candle range of 15 cents, and you're telling me less volume gives you a range of 89 cents, no, that didn't happen. So the volume is the tell for the wicks. So I would say low of the day is 25.65, which obviously would give it a much different look on the daily candle. So we didn't drop nearly as much. It was a very low range. I mean, that's pretty much where the low of the day was. A little bit lower, but you get the idea. Oil, green day today, has me watching for this falling wedge. It's shaping up beautifully. Anything under 95.05 is just a daily lower high. We get to a point where with falling wedges, if this is a day trade, if this is a 5-minute time frame, I buy the bear break with no follow through when I recognize that it's likely a wedge. If we keep dumping, I stop out based on a dollar amount that I'm willing to risk. So my stop isn't based on a support price because by definition, the falling wedge breaks support to form. So I stop out based on a dollar amount. So I can't let my positions be too big because the last thing I want to do is stop out right before the bounce, because again, that's what falling wedges do. So if I recognize a bear break straight into a bounce and I make an entry, I sell partial anticipating the lower high, I rebuy half. On a bear break with no follow through, I sell half looking for the lower high, and then eventually I'm left with a half position at a really low good average and the bull break takes place. Or if I buy the bull break as well, if I'm only in a half position and want to go back to increased size, I can then average up with my second position. That's how I trade falling wedges. And I'm not doing so on this daily time frame for oil, but that's one potential strategy. The other strategy is reaching a point where you say, all right, if this is going to be a falling wedge, that needs to be the low. And I'm not there at this point to say that, but an aggressive bull is going to make the assumption that we're not going to drop below 85.73, and that the next thing that we're going to see is a 12-hour trend change to the bulls. So very curious to see how this plays out, and it will certainly have impact on the energy sector, XLE, and the individual oil names that are a part of that sector. Energy sector bull break on the daily here, continuing its monthly bounce. Monthly higher low is set off EMA 12. Oil is trying to set a monthly higher low off EMA 12. Natural gas, got to be cautious of the double top. Anything above 846 is a daily higher low, but a lot of volatility here where we double topped and then dropped something like 7% very, very quickly. So again, got to be real cautious because if we lack follow through here, it is a rising wedge type setup. But the daily higher lows are going to be our guide for now. I hope you had a good day. I hope you have a great weekend. Don't forget to do a good thing or two.